Hello students, today we will discuss a previous year question that came in the accounts exam held by the Assam Higher Secondary Education Council. So the question that we have is, mention any three distinctions between cash basis and accrual basis of accounting. So before going to the distinctions between cash basis and accrual basis, we will understand the meaning of these two. So what is cash basis? As the definition says, or cash basis records revenues when cash is received and expenses when cash is paid. The features of this basis is simple and easy to maintain, it focuses on actual cash flow, and it does not record credit transactions. So what is cash basis of accounting? So in this basis, transactions are recorded when cash is received or when cash goes out of the business. For example, if a business sells goods of rupees 10,000 in a particular date and he receives it, and when it is sold on cash on that particular day, the businessman will record it in his books. So as cash is received, the transaction is recorded. Or suppose when the business person makes a payment on a particular date, that when cash goes out of the business, the record is done. That is, the recording of that transaction is done. So what does cash basis of accounting do? The recording of transaction is done only when cash goes out or cash comes in. And it is this basis, in this case, it is simple and easy to maintain. Then in this, the accounting is simple and easy to maintain, focuses on actual cash flow, and it does not record credit transaction. Why? Because as the name says, cash basis, the recordings are made only when cash comes in or cash goes out. Next basis is accrual basis. As it is said, it records revenue when earned and expenditure when incurred, regardless of cash movements. The feature says it matches income with related expenses in the same period, it recognizes credit transaction. So what is accrual basis? Whenever a business activity is done, the value of that business activity or value of that transaction is recorded in the books of account. So that basis we call is accrual basis of accounting. As it is said, revenues will be recorded when it is earned. So if a business sells good for credit, it will be recorded in the books. Why? Because revenue is already earned. The debtor will pay the amount, but the good is already sold. So the revenue is already earned, so it will be recorded in the books, and that comes under the accrual basis. And recordings are made when expenses are incurred. So when suppose payment, outstanding salaries, suppose salary of an employee is outstanding, but that will be paid, that will very much be paid. The cash doesn't go out, but the payment will be made. So that kind of a transaction will be recorded in the books under accrual basis. So what it is said, match it in recording of these transactions, they match income with related expenses in the same period, and they recognize this accrual basis, recognize credit transaction. Why? Because they record when revenues are earned. So this was the concept of cash basis and accrual basis of accounting. Now we move to the point of difference or distinction. The point of distinction between cash basis of accounting and accrual basis of accounting are: first is timing of recording. In the cash basis of accounting, records income and expenditure when cash is received or paid. As I said earlier, recording is done only when cash goes out or cash comes in. So during the time, only when on the date of when the cash comes in or when the cash goes out, only during that time the recording is done in the cash basis of accounting. In the accrual basis of accounting, however, records income and expenses when they are earned or incurred, not when cash is exchanged. So as I said, Earlier, when incomes are earned and expenses are incurred, regardless of the cash inflow or outflow, the transactions are recorded. So this regardless of the cash inflow or outflow, whenever income is earned or whenever an expenditure is incurred, the recording is done. Next, the basis of difference is simplicity. So cash basis of accounting is simple and easy to maintain because there is when the cash comes in, the recording is done. When the cash goes out, the recording is done. There is no the person or the one who keeps the record, maintains the recording, does not have to use much of his time. He just have to record it. But in case of actual basis, more detailed and accurate recording is done. Why? Because some incomes may be not received yet. The cash amount of that income may have not been received yet, so that becomes an outstanding payment or income. And then some expenditure like outstanding salaries, that the expenditure is incurred but the cash doesn't go out yet. So those kind of transactions has to be more detailed and accurate while recording. Next, suitability. Cash basis of accounting is mostly suitable for small businesses and individuals only, because it is simple and easy to maintain. So small businesses and individuals are most suitable for this basis of accounting. However, accrual basis is used by larger businesses and for financial reporting purposes. Big businesses, big companies, big business houses, they have to maintain the accrual basis of accounting only. So these were the point of distinction between cash basis of accounting and actual basis of accounting.